Wait for her. Let's have a look at gold. You can see it's down around 2%. We are joined by Jeffrey Christian, managing partner at CPM Group. Jeffrey, sorry about that botched introduction. Great to talk to you again. Tell us, why did gold hit, that spot gold anyway, hit a record high overnight?
It's not quite clear to us yet. We're waiting for some data that will be available on Tuesday. But you know what happened was there was a surge when trading on the COMEX recommenced electronically at 6 p.m. Eastern time yesterday. There was, within about 18 minutes, a surge of trading volume. And you saw about 4.3 million ounces of gold futures contracts trade within 32 minutes. It's very important to understand it wasn't a single trade. It was thousands of trades over a half hour that drove the price up from around, I think, around 2,060 at the time to about 2,150 or so. The high was $2,152. And then it came back down to $2,038. It's about $2,050 right now. It was a large number of trades. Now, the critical thing, there are several critical things. Silver, petroleum, platinum also rose sharply at that time and then fell back. And the S&P 500 futures fell sharply at that time and then came back a little bit and stabilized. So what you were seeing was somebody waiting till the opening of New York trading to make large trades on equities and major commodities. The question is, were they reacting to Jerome Powell's comments on Friday, or the missiles in the Red Sea on Sunday, or something else? And the real important question, which we can only wait until tomorrow to see the data, which will tell us, were these people covering short positions in gold, silver, oil, and platinum, and long positions in equities, or are they buying fresh long positions in the commodities and making fresh short positions in the equities? We won't know till we see the open interest data tomorrow, and that will give us a lot of insights as to the nature of the buying that we saw and the sustainability or likely next directions.
Jeffrey, what's your outlook for gold in the near and short term?
We have been predicting a sharp increase in gold prices in the final quarter of this year and into 2024, 2025. I think this is a taste of what to expect as the political and economic worlds unfold over the next 12 to 24 months. So this is in line what we've been expecting. We have been, for several years, urging investors to curb their enthusiasm and pace themselves, saying that it would probably be 2024, 2025 before we saw this. Now, gold prices set record price levels in 2020, 2021, 2022, and again, they're setting record levels in 2023. But, that's been what we've seen as a precursor to a more forceful upward move this in 2024, 2025. And this just sort of confirms what we've been saying for the last 4 years.
Jeffrey, we're tight for time. You wrote a piece in late October talking about soaring global debt, or not just America. You say a lot of people, or some gold bulls, focus on America's massive deficits and growing debt. You think there is some hyperbole out there. Debt is a problem, but perhaps people shouldn't just be focusing on American government borrowings.
Right. First off, there's an enormous amount of hyperbole. There's all these people waving their arms and saying this is Armageddon. It's actually solvable, and it's actually similar in some ways to what we saw in the late 1940s, 1946, 47, 48, when U.S. Treasury debt was about 120. But one of the points we made was U.S. Treasury debt is one of the least risky assets. And if you look at global debt, it is 3 times global GDP, whereas U.S. Treasury debt is only 120% of U.S. GDP. So you've got a much bigger problem on a global basis with much riskier debt. And what will happen if you have, as you have debt problems unfolding, is that people will actually pivot away from that other debt to the more secure U.S. Treasuries. So there are all these people. I mean, I know one guy who's been saying that the Treasury market's going to collapse since 1981. There are all these people waiting for the U.S. Treasuries to collapse. They'll be the last debt market to collapse. They're the place, along with gold, that people flock to when the debt situation in more risky securities, corporate debt, private debt, consumer debt, other governments' debt, U.S. Treasuries will be the place that people flock to during the unfolding of any future debt crisis.